vote on the overhaul of the Kenyan constitution is here. It promises a radical new constitution for the East African country. The research company TNS Research International says more than two-thirds of Kenyans back the proposed changes to the constitution. The report suggests that 1/4 of Kenyans will reject the document, though. Let's take a look.
The referendum on the draft constitution offers Kenya the chance to clean house to help it ensure a stable economy that is in tune with the rest of the world.
This process has been going on for so long, at least till the 1990s, that really at some stage you want to put an end to it and then move on with it. And also if you look at Kenya's recent political history, there's been so much tension both from the 2007 elections but also in the referendum campaigns recently.
There is little doubt that the post-election violence in December 2007 scarred Kenya's image. This new constitution offers Kenya the chance to make wide-ranging reforms.
The Vision 2030 is a vision for Kenya, for every citizen, for everybody to look forward and say, where do we want to be in 2030? And I think this is a step in the right direction, because when we were looking at this whole Vision 2030, we saw a lot of impediments in the current system, in the current laws that don't allow us to be as progressive as we want to be.
Already, many in the country's business community have given the thumbs up. The Kenya Association of Manufacturers says the new draft constitution could help attract investors.
Most of all, we felt that this country requires a single chief executive officer, number one. Number two, separate and institute checks and balances between institutions. And a proper government is where you have a strong judiciary, strong executive, strong parliament.
The opinion polls say most Kenyans are likely to vote yes. If so, Kenya will become the only country in the region where cabinet is appointed from technocrats and professionals nominated by private business. It will also reform the country's centralized fiscal system to ensure more resources get to the regions.
It would be much preferable if we can say we've got a clear legal framework and we can move on from having the constitution to writing the subsidiary legislation for it, and just basically put an end to this protracted process that has created a lot of tension in itself.
Other major changes include a decentralized administration run by elected grassroots leaders and a shake-up in the judiciary. Within 6 months of the Constitution's adoption, a new Chief Justice and Attorney General will be appointed. Judges will have to prove their competence if they are to stay in court. In elections, it means a president will have to win at least 50% of the vote to take power.
Well, I think the fundamental things for an ordinary citizen is the Bill of Rights that this Constitution brings. It's the broadest I can imagine. It makes it is going to be very difficult for people in this country to suffer, to be poor, to be uneducated, and to undergo the sort of injustice and abuse of rule of law that we have seen in the past.
There are contentious issues which could fuel opposition to the new draft constitution. The red side, that is the no voters, call for the defeat of the vote over land ownership, the legalization of abortion and the inclusion of Muslim Qadi courts.
This whole controversy, I think, has been blown out of proportion, really, because it's been said for the upteenth time, needs no repeating, really, that the Qadi's courts will affect the people who profess the Islamic faith, and to the extent of only marital issues and inheritance. Nothing beyond that. The rest of the matters are falling within the normal judicial system as we know it. But it's become a matter of contests of faiths, where the Christians and the others think that by putting the Qadi's courts in the Constitution, they've been elevated in the eyes of the public or in their eyes. Well, some can hold that. I don't believe that is the case. The Qadi's courts have been there. They came in there through an agreement with the Sultan and so forth. We adopted them. They were extended to the rest of the country. We've lived with them without harm. So I don't know why the paranoia, that is being created around there is coming, where it's coming from.
The new draft constitution promises Kenya a clean slate as it strives for stability. It could also give business a bigger say in the running of East Africa's biggest economy.
Well, staying with that matter, we've seen the momentum on the NSC 20 over the last week. Despite previous anxiety, investors are inspired by a possible yes vote in this referendum. Nonetheless, questions remain as to how this new constitution is going to change the business environment in Kenya. Greg Barker is the Director for Investment Research at Sustainable Capital. He's standing by in Cape Town. Greg, thank you very much for coming through. We know that voting has gotten underway peacefully and the day's concluded in East Africa. It's been suggested that it's going to be a possible yes vote. Polls suggest by 68% or thereabouts, but there are general concerns. Just talk us through them, please.
Yes, hi, Lerato. Well, I think the first is to be cautious of the exit polls, because as we saw from the 2007 elections, that's not necessarily a good indication of the outcome in practice. But I think in terms of concerns regarding the constitution that's been proposed, I think it's not really the constitution itself, but rather how that is implemented in terms of the rule of law in Kenya. I think the drafting of the constitution is it goes back, if you remember, that was one of Mr. Kibaki's main election promises for his 2002 campaign when he came into power. And was then subsequently voted down in 2005. So I think this is long overdue, and it's likely to be net positive for the real economy, but the question is how it will be implemented on the ground over the next 5 to 10 years.
All right, now what we've seen on the NSC 20, which is an indication of investor perception in the country, we've seen the market gain 33% in the last year, and in recent weeks, again, we've seen, on the last 5 sessions at least, some momentum, but there was some anxiety earlier on, and an anxiety that led to a pullback, that led to foreigners selling their shares, and those who were still active moving into bonds despite the lowered interest rate, and them getting about 1.8% back on the returns for the bonds. There's been a mood that, you know, all is well but not that well. Bonds versus equities. What do you think is going to change going forward?
Well, I think just to start off with the equities, I mean, the 33% gain, that needs to be seen in context of other frontier and emerging markets that have recovered off quite a low base. So you need to separate out what is the Kenya-specific component of that movement. But in terms of just getting back to your question on the bonds, I mean, from an equity investor, most of that investment into the bonds has come from banks and institutional investors, many of whom are mandated only to invest in that in a Kenyan security. So effectively, there's a decision there between, do I invest in an equity or do I invest in a bond? So a relatively low yield of, let's say, 1.8% would indicate that investors are willing to accept a lower yield on those bonds in order to get some money out of the equity. So from that perspective, it would be seen as net negative for equity markets on the Kenyan bourse. But for outside investors, you could interpret completely differently. You could say that their expectations are pricing in that inflation will be controlled in the future. So it just depends how you split it out, right, and what type of investor that is.
Well, there is a sense, Greg, that if endorsed as is expected, what the new constitution will help to do is reduce the perception of Kenya having a lot of political risk, being a highly volatile political environment in which to do business. What other risk factors remain? And if you're a fund manager advising an investor going into Kenya, how would you advise that they manage those risks?
Well, I can't speak for other fund managers, but in terms of our own investment process, we would implement political risk, rule of law, government effectiveness, control of corruption into our actual portfolio construction process. But in terms of, you know, what fund managers would look at before and after this constitution, I don't think that the constitution itself changes the perception of political risk in Kenya. I think it will take far more than that to convince people. And if you just go back to Mr. Kibaki's coming into power, he made 4 main promises. One was in terms of improving education, the other one was getting the economy going, and then there was control of corruption and political reforms, which included the drafting of this constitution. So on the economy and the education, you know, if you look at any measurable objective measure, he has succeeded in those 2 areas. The areas where he's fallen down has been the control of corruption and then also finally the constitution, which is now being brought to referendum. So I think that puts it in context historically. The constitution itself is not going to change the perception of political risk. Right. What fund managers will be looking at is real evidence of that happening on the ground.
All right, let's go forward and look at the state of the Kenyan economy. We know that the main drivers of foreign exchange within the economy are the tourism sector, tea and horticulture. And we know that post-electoral violence, early 2008, the tourism sector was slashed by about 1/3, and the others have shown modest gains since then. How will this constitution enhance investments within the country? Because we're told it's going to address things, for instance, such as property rights and tenure of land. It's going to revise certain clauses on taxation and intellectual property rights. But how is it generally going to say to the investor, this is a country that you can feel confident about putting your money in?
Well, I think you're correctly distinguishing there between portfolio inflows and foreign direct investment, because for some foreign investor to invest in a stock on the Kenyan exchange, let's say Safaricom, they can easily invest or withdraw that money overnight. Whereas a foreign direct investment is a physical investment, physically putting a factory in the ground, then all of your rule of law, all of your basics like property rights, contracts being enforced, that becomes far more important to an investor who's actually putting in physical infrastructure. And I think that's where regulatory reform, and this constitution is part of that, can encourage that investment that is required. Just getting onto your question about the main sectors of the economy, obviously tourism, you know, Kenya being a long-haul flight destination, and it's really affected by perceptions. I mean, for example, in the recent crisis, post-election crisis, you know, your average tourist was not really willing to take the risk of traveling into Kenya. So it's not surprising that that sector was hit by that violence. And then in terms of the tea and the agriculture side, that's really commodity driven. So on the price side of the commodities, there's a big component that's out of the control of the Kenyan government. All they can control is their actual production of those commodities.